Welcome back to Bull on the Street. It is September 25th. My name is Coriano. I'm joined with my partner, Daniel Wachtel. And we are here to talk about all things finance, all things Wall Street. Dan, let's look up a stock today, right? That what we should do? Should we look up a stock?
Why not? Since this is Bull on the Street, we might as well look at some stocks.
We might as well look at a stock. What are you thinking?
How about tech?
I had my eye over on the weekend on McDonald's. I've been stalking McDonald's. I don't know why, but I think they're gonna raise their dividend. They've been having some really big dividend raises. Yeah, so I've been looking at that one. What do you want to look at?
You know what? You're right. I'm a little teched out.
You're a little teched out?
Yeah, I did just buy an iPad, though, so I had to give a shout out to Apple, but I do not own it, and I will not be owning it for the next 72 hours.
Okay. So that's a no-go? That's a no-go. Yeah, I mean, what's the market doing right now? NASDAQ's down 1%, Dow Jones 0.5%, S&P 500 0.5%, McDonald's down 1% and a point and a half, almost 1.23%.
Part of that has to do with just the uncertainty of Janet Yellen. A lot of that has to do with Apple weighing on the market. Apple's weighing on the market a little bit, bringing it down, and Trump and North Korea. People are a little worried about what that's going to be. That's all basically.
He's got his hand on the button, folks. He's got his hand on the button. Everybody's got their hand on the button. They're scaring the hell out of all these citizens. These two guys.
Yeah.
We're getting scared, man.
If you're an investor, that type of stuff, that doesn't matter. It's that shouldn't matter. You should just.
Well, I'm looking at defensive stocks. I'm looking at the guys who make the tanks. I'm looking at Remington Arms. I'm looking at Halliburton. I'm looking at a few contractors, that would benefit if World War III came out. Because someone's gonna benefit. World War III comes out, someone's gonna benefit. I hate to talk like that. I don't even like to put that juju in the air, to be honest with you.
But I don't know. Depending on how World War III plays out, I
might not be around. Yeah, I might not be around to collect the money. Yeah,
but I would definitely invest in Red Bull, Monster.
Red Bull.
And Monster, they gotta stay awake.
That's true enough, man. I don't think I'd want to probably sleep, but I'd be sleeping less naturally though. I don't know if I need the Monster. Monster actually might be a good stock. So hold on, let's look at McDonald's real quick, and then let's look at Monster. Why not? Let's do that.
Yeah.
So McDonald's right now is trading at $157. 52-week range is between 110 and 161. The dividend yield right now is 2.39%. It's a horrible dividend yield by most standards. Who wants to make 2-3% on their money? But what I find interesting is that first of all, they're paying 94 cents. They're paying 94 cents, but they raised it to 101. So they raised it 7 cents on the dollar. 7 cents on their dividend. So this is a quarterly dividend. They missed the dividend back in 2015, but I really think that was for cash reinvestment purposes. Let me look really quick here. So I'm not.
This is what we do. This is how kind of a look into the very, very, very beginnings of how we pick stocks.
Yeah, so I mean, this is they've but before that miss, they hadn't missed since '87. They were issuing. Now they went to a yearly dividend for a while. Back in 2000, 2001, they went to a yearly dividend, but they didn't miss. They never miss. So I like that. I like that stocks never miss. That money's always going to be there. And what I like about it is my main focus here is, one, it's a growing dividend, man. These guys are, they went from 94 cents to 101. And I definitely think they can go to 110. this is personally, I bought Yum Brands a while back. For those who don't know what Yum Brands is, it was a KFC, it's KFC, Pizza Hut, Taco Bell. I was in China, and I saw them all over the place in China, and I happened to buy them. When I came back, it turns out they split. So they split the company. They split the China company and the American company. I made a windfall. It was like 200% on the investment. I think the same thing's going to happen with McDonald's, because McDonald's has a large presence in China, a large presence internationally. We've seen the Coca-Colas of the world split their stocks into multiple exchanges, be on multiple exchanges. So I like McDonald's. I think it's a strong company. They have a strong presence in China already. I think it's a cool way to play China, and it's a dividend earner, man. You know, I like it. What do you think, Dan?
You know, just looking at it, it's McDonald's. You know, you're going to get exactly what you think you're going to get from McDonald's. It's a large company that is everywhere already. It's, you know, they have a lot of franchises all over the world. For me, like what I'm looking at right now, their profit margins 21%, their operating margins about 34%. So that's pretty damn good. You go down, their revenue is 24 billion and change.
Yeah, 24 billion, 600 million and change.
And their EBITDA is 9.6 billion. So we got quarterly earnings growth of 27%. They have about 2.4 billion in cash on hand. A lot of debt because they own a lot of land.
Yeah.
They own all that land, and which is a good thing. It's not a bad thing. It's something tangible. They still have to pay off the debt though. But I mean, when you're not, McDonald's isn't going out of business tomorrow. You know, it's something that's always going to be there, even though they try to you know change with the times, which is great because for the longest time they never change with the times. And I guess since the new CEO took over, or the CEO before this one, they started to.
I mean, look, they beat estimates. They beat analyst estimates for the last 4 quarters straight. They constantly beat the analyst estimates. I'm not saying that means anything. I don't really care about analysts, but it says something when an analyst projects one thing and, you know, the company's always beating. Now, that being said, their revenues are going down. So they're the last 2014, 2015, 2016, their top line has gone down.
Earnings, though.
Yeah, they're making it work for them. They're making it work for them somehow, but it's.
But accounting tricks. Any company, all companies do that. You know,
not accounting tricks, right? Look, if let's explain that to people, right? So if you are making $10 million this year and it costs you $8 million to make it, you only made $2 million profit. If next year you only make $5 million, but it only costs you $1 million to make it, you made $4 million profit. So there's a way to make less money total and make more profit, right?
Right. It really, everything comes down to how they do their accounting. I mean, we have to stick with GAAP, your generally accepted accounting practices. But if they do anything differently, if they hold this into this little area for a little while, that can give them a little bit more, you know, income. You know, the cash flows can be.
This is an interesting play. The more I look at this, you know, at first I'm saying this is a great dividend producer, but the revenue is going down here, man.
No, yeah, I think it's.
They're going down and they're paying out their cash.
I wouldn't buy it if you gave me, you know.
I might short it. They're paying out their cash. They're paying out all their cash. They don't know what to do with their cash. They're paying out their cash, and they are losing. They're going down in revenue for the last few years. So
You know what strikes me?
The stock is not doing that, right? If you bought the stock a year ago, you made out like a bandit. If you bought it, let me tell you right now, if you bought it a year ago, you made 34% on your money.
If you bought stocks a year ago, you made something on your money.
I did buy some stocks a year ago, and they just kept on rising. I'm like, they just kept on rising for no reason at all.
Yeah, it's a bull market, my friend. And a bear market lets me start buying more stock. But you know what's striking about this, and it's one of the first things I looked at. The PEG ratio, which is the price to earnings to growth, one is where you want it to be. Anything more than one is starting to get a little crazy. I was looking at one the other day with 79, but I looked over and I just I always want to take a glance and see who's holding the stock. Percent held by insiders. Just it doesn't mean much, but to me it means it kind of does mean a lot to me, because if they don't believe in their own brand, then they're not holding it. The insiders of McDonald's hold 0.1% of the whole float.
0.1. So 0.1%.
Yeah.
Yeah, I mean, well, it's a 0.1% is still a lot of money. It's a $127 billion company. So I mean, these conglomerates, it's very rare you find a $100 billion company own 20%, 30% owner. I mean, is Ray Kroc alive? I don't think he's alive.
No, when I say held by insiders, I'm talking about insiders, like all the C-suite guys, all the top echelon guys, all of their stock, not just
Yeah, I think it's an interesting stock. I think the listeners should let us know if they have an opinion about it, man. Give us a shout out. Let us know. Let us know if you guys want us to review a stock also while you guys are watching this or listening to this, guys. Email us at bullonthestreet@gmail.com. We'll be back for another episode of Bull on the Street. This is Nicholas Coriano and Daniel Wachtel.